please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we have for now Ashwani with us for the BTST calls. We'll just repatch that connection with Mitesh as well. Ashwani, so at the lows of the day, thoughts here, and of course individual stocks, what's the call?
See, my sense is that the market is barely holding on to support. So if not today, tomorrow, day after, we should definitely break down. This is a good time to take short positions on Nifty, Bank Nifty, etc. because the range is now fairly clearly defined, and we've been there for many days. And if one side is not getting taken out, the other side generally does. So going by that, I think right now you can still go short on a BOB. That's a sell with a stop of 141, target of 130. ICICI is a sell with a stop of 281, target of 268. And Raymond is a buy with a stop of 1100, target of 1165.
Okay, I'll tell you something on this. We move on PC Jeweler. I think there's something wrong here, Surabhi, because stocks don't fall 17-18% without a reason. I don't know if we'll have any disclosure or anything later on, because in the past also, there have been issues when there have been inter-company sort of transactions, of course. But you don't fall 17%. I know the market is weak, but here I think there's something more happening.
It's definitely unusual, absolutely. Yeah. Okay, let's talk about a move on the upside. By the way, Zensar Tech, there's some heavy duty buying happening on that stock now. Suddenly, in such a weak market, it's moved up about 9 to 10%. Maybe we can pull up the intraday for you. That is what I'm talking about. Take a look at the buying on that stock. Yes, mid-cap tech is doing well, but this seems to be exceptional. Numbers were okay. Dollar revenue was up about 3.5%. The management, I'm looking at their commentary to us earlier today. Their digital revenue was up about 8%. They're saying that they're seeing some momentum there. Someone's definitely gotten onto that stock in the last couple of minutes. Mitesh, what are your calls? How are you looking in the last few minutes?
Yeah, so I have one buy and one sell. I think Kajaria Ceramics has broken down a key trendline support on the intraday chart. So sell with a stop at 562. Look for targets close to about 530 there. While Marico on the intraday charts has just reversed, I think 15-20 minutes back. So I would buy that one, keep a stop at 316, and take it as a BTST or 1-2 day kind of call for targets of around 332.
Okay. Deepan, before we thank you, we're expecting Ultratech's numbers anytime now, of course. Your thoughts on the cement pack and Ultratech in particular?
I think we are expecting good numbers from cement companies per se. I think it's been a good quarter, traditionally has been so. And now with the overall economy improving, I think cement should do pretty well. And they may have been able to pass on some of the cost increases which they have witnessed. And I think in Ultratech it's also more to do with how the acquisitions which they have made, how they have performed, and whether they have made progress and improvements over there. So I think hopeful of decent numbers from Ultratech and other large cement companies as well. I think ACC numbers which came through were pretty decent, and that is an early indication that cement industry is in good health.
All right, Deepan, we'll leave it there. Thanks a lot for your time today. Well, let's move on then. Now we have Anish Damania now joining us. Of course, he is joining us from Mumbai itself. Head of Institutional Equities at IDFC Securities. Anish, hi, good afternoon. So, been a good April for the market after 2 brutal months, but you reckon this market is now running into a bit for rough weather?
Yeah, so, what, last time when I had said that you will have these bouts of, markets going into a downward trajectory and then later on recover somewhat and go upwards. But to my mind, till the time we start seeing now concrete earnings growth coming up, markets are not likely to go out of this range. But what I can say is that ex-banks, I think numbers are expected to be good. So if that gets delivered for the quarter, we will see a decent run in the market. Till that time, market will remain range bound. Also, you see on the flow side, FIs have been continuous sellers in the market every day. So that is kind of putting a little bit of brakes, and given what's happening on the global markets with US yields rising, probably that will put some pressure on the markets at this point of time. And also given that we have had a 5 to 6% run up in the markets, it might take a breather at this point of time.
Breather, yes, Anish, but would you expect a retest of the earlier lows, 99.50? Or do you think that we don't have that kind of a cloud above our head that we'll go back to that level?
I don't think, 4 or 5% fall in the markets is kind of a great thing, if at all there is. So I would use that as an opportunity to buy the stocks which we were looking to, market more aggressively. So that is what I can say. Very difficult for me to make a call on a plus minus 5% up move or down move.
So sectorally, Anish, then how to approach this market? Where would you place your bets?
Yeah, so if you look at the last few years and clearly over the last 1 year, it's earnings growth which has kind of driven stock prices. Earlier it was asset-light stories. In FY18 and part of FY17 it was the asset-heavy stories. But now clearly both stories are now looking equally good. So wherever earnings growth has come through, those are the stocks which have delivered returns, and I think that trend is going to continue, be it an asset heavy side or be it on asset light side. So all what you need to be invested in, wherever you find companies with a reasonable degree of certainty that over the next 1 year or 2 years they will do well and earnings growth would be good, those are the companies where you need to be focused on. Those companies which are not going to deliver earnings growth, even if they are cheap, they are going to remain cheap. And if they are expensive, they are going to underperform the market big time.
Anish, your thoughts on two specific themes that are playing out. I mean, they're recent themes. One is the Lemon Tree IPO got everybody excited about hotels and hospitality. And the second is perhaps it's this Quest Corp Thomas Cook transaction that is getting a lot of attention back on the, the services space, the staffing space. And some of those stocks are pretty excited. Your thoughts?
Yes. Yeah, so if you look at the staffing space, because we cover team leads, what we see is that there is the shift towards from unorganized to organized is happening for quite some time. But after the demonetization, a year after that, the pace has started to improve. And one of the biggest things which has happened is that now you are expected to give your salaries out, by check or through an electronic means of transfer. So to that extent, you are seeing a huge formalization of this economy, and given that Team Lease and Quest Corp are leaders in that kind of a space, we see that as a big opportunity for both these companies. Now, one needs to look at the valuations versus the opportunity out here. But on a longer term basis, definitely these stocks look to poised to deliver definitely much bigger growth stories than what one could expect, and hence the valuations they are trading at look very expensive at this point of time. But it looks good. You asked about Lemon Tree. Hotels is one sector which we don't cover, but as a market observer, what I can see is that we are seeing traction in the economy, and we are starting to see occupancies increasing a fair amount in the hotel sector. And given that that thing is happening, and with the economy recovering, we probably are seeing that this sector is probably going to benefit quite a lot. And Lemon Tree listing, or Lemon Tree IPO has actually answered, when the management probably would have gone out on a roadshow, they would have answered a lot of questions around this. So I believe that there is very big positive traction on the hotel industry, which has been there for some time, but this was probably the catalyst.
Okay. Anish, the other thought in the market, I mean, coming to this whole balancing act that's played out last couple of weeks, IT stocks, frontline IT seems to have tried to make up for what the banks have not been able to do. Do you see this continuing, and can IT continue to offer the offset?
So what we feel is that IT has become now probably a play on the currency as well, and as probably rupee has started to depreciate a little bit more than what most people expect, the run up in the IT stocks which we have seen so far could continue. Also, you are seeing hardening of yields in the US, which is probably signaling that growth is coming back in the US, and which has been the case, and we are starting to see actually the contract sizes becoming bigger. So all this is positive news for IT. IT was suffering from uncertainty on business front and margin concerns given hardening of the rupee so far. But both these things are now starting to go behind us, and they are acting now as a tailwind factor for IT companies. And what we see is that if you look at the YTD performance, IT has basically gone up by, IT index has gone up by about close to 22-23%, and that has been the primary driver of the rally which we have seen so far. So I think if that is the case, then we feel that there is definitely some merit, and given that stocks, frontline stocks still are not very expensive in this category, there is some more steam left in these companies.
Oh yes, by the way, market is recovering a bit from the low point, and of course TCS is one reason. Just pull out the intraday chart of TCS and Reliance. So on Nifty at least there is enough support for the market. That's TCS now getting back to the high point, 34.75 on that stock, and Reliance from the low point is recovering a bit, so that one also looking quite interesting. A couple of other stocks, Kotak Mahindra Bank, that's been the strongest of the banking stocks. Just pull out the intraday chart on Kotak Mahindra Bank right now. That stock is moving to the high point. So from lows, there's been a bit of a pullback that you have seen. Consumption, Anish, massive run in most of the consumption stocks at current levels. Is there anything that you still like?
So not surprised to see consumption stories doing well, primarily because we are starting to see the benefits of formalization of the economy, and also economy coming back on track, having its impact on consumption themes. And as a result, the earnings of consumption companies will remain strong. So we expect that earnings to remain strong for the rest of the year, and probably we see a visibility of 24 months or so. So consumption stocks are going to outperform the market.
By the way, Bombay Dyeing is on the move as well. Lots of these real estate stocks quite erratic. Anish, finally, before we thank you, any mid-cap idea for us?
So we would be looking at the construction space very aggressively, and I think we can choose between Ashoka Buildcon or Sadbhav or IRB Infra.
Okay, fair point, Anish. Thanks a lot for your time today. That's a view from IDFC. Those are Ultratech's numbers. The first number is below street estimates. 488 crore is what we have on the net profit. Now the stock had rallied a lot, of course, ahead of numbers. So I don't know how that one will be seen. For now, that's the only number that we have. Pricing could be an issue here, but we'll find out. For now, we have only the net profit numbers, Surabhi, which is, I think, below the street estimate, right?
Yeah, so that is 488. That's the standalone net profit number. We are expecting a sales number that should come up for you in just a bit, about 30% increase on the top line. That would be 85,110, but I don't immediately have that number. In fact, as per the press release, if I'm reading this right, the standalone number for the okay, no, this is a different number. Nigel, any further details?
Yeah, I think on the top line, actually, it appears there is a bit of a beat, because if I'm looking at the revenue from operations, it's coming at around 9,000 crores. So, that's appearing a bigger than estimated increase that we are working with in terms of a top line growth itself. We were working with a growth of around 29%. If I just compare this on a like-to-like basis, it appears that in fact on the top line, there is a growth of around 36% or thereabouts. So the top line is a bit of a beat. Let's move to the operational performance then. Remember, we are looking out for what exactly is the contribution from JP Cements. If that is higher, it will help the top line, but it will not help the profitability. I think, if I'm not mistaken, Surbhi, you can correct me if I'm wrong, there is some stamp duty on acquisition of assets as well.
I'll just check I'll give you two more numbers, Nigel, to work with. 31% increase in volumes, that's above what you were estimating, and a 5% increase in realizations.
Okay, so
that sounds good.
That's good.
Yeah.
So that's good. I think that bottom line is suppressed because of that one-off that I can see in the books right now. It's stamp duty on acquisition of assets. That's 227 crores. But otherwise, the operational performance looks a little better. Yeah.
Oh yes, I think the operational performance looks really good, and that's the reason. I think the market first reacted to only that net profit number.
Yeah,
I think that stamp duty
226 crores because of the stamp duty.
Yeah, so that stamp duty angle, of course, is the one reason that has pulled down the net profit. But the volume number is, look at the margin, 18.9% is the EBITDA margin versus pole of 17.2%. I think that's the number really to focus on for Ultratech Cement, because the big fear was that what would happen with the margins, and now we have that margin number, Nigel. So suffice to say that these are actually good numbers.
Yeah, these are good numbers. Actually, these are good numbers. On the operational front, it looks better. The reason that, in fact, the bottom line is missed is because of one-off. Otherwise, operation is looking good. And Surbhi, I think you said that the volume growth was better as well, and realizations you're talking about increase as well. The street would have been happy if it was a flattish or a mildly positive realization number. If you're saying that, in fact, it's a growth of around 4 to 5%, if I got
5% in realizations,
5% on a year-on-year basis is what they've mentioned.
That is what I have.
Even on a year-on-year basis, in fact, that number would go down well. So it appears that, in fact, on an operational basis, it is a beat prima facie. So those numbers look good. Top line beat because of higher sales volumes. Operational performance as well looks better. They've got a bit of a tailwind coming in from higher realizations. So that as well looks quite good. The only reason is, in fact, the profit was missed because of the exceptional item.
So largely speaking, Nigel, they've done better than what was anticipated, right? Because what the fear was that as they go through the amalgamation of the JP assets, that's going to be denting the operational metrics as well. So they've weathered that well. If you just take aside the one-off.
Yeah, and we'll have to wait for the press release now. The press release comes with a bit of a lag, so we'll have to know exactly what is JP Cements ramped up to. First quarter of the last fiscal, it was at around 15%, then it ramped up to around 40%, then it was at around 50%. So have they ramped up to around 60%, then obviously you'll get operation leverage as well. That will play out. Keep in mind, if the margin beat, then I'll take it very, very positively, because pet coke prices, which constitute nearly around 70% of their fuel mix, that in fact has spiked up on a sequential basis, and it's much higher on a year-on-year basis as well. So I'll just run through the numbers as well, but fair to say that in fact operationally it looks good.
Okay, operationally this looks good numbers. So that's Ultratech Cement. Ashwani, very quickly, any chart check on this stock?
On
Ultratech.
Ultratech.
Yes.
See, Ultratech is one of the strongest cement stock, but you can say it's sideways between 3850 and 4650. So if you get either of the boundaries, that's where you act. Right now at 200-day moving average, the results, bad or good, I think the stock is recovering from the lows. So that means the results haven't had much of an impact.
Oh yes. By the way, we'll just focus on those numbers once again. I just want to point out that IT is once again having a good home run. Just pull out the intraday chart once again of NIIT Tech. Ashwani, that was your big call of the day in the morning. 8% higher now on that stock. What next for this stock now?
See, ever since those results came out and started shooting up on the upside, something has been looking like different this time. So this may be an emerging large cap, the way it's moving. So that way, I think people who hold on to it, right from say 500, 550, I think whatever IT does, this could be an outperformer.
Okay, we have Manish Raj from Daulat Capital joining in. Quick take on the Ultratech numbers. So Manish, if you strip out the increase in the interest costs and this tax provision, which obviously has had an impact on the bottom line, operationally, how do you rate the numbers?
Operationally, the numbers are in line with what we were expecting. So margins have remained in the same zone that we had expected out. It will be now we'll have to see whether this was a realization-driven gain or it was a volume-driven gain. People will like to watch that commentary, what the management is going to make out regarding the price improvement. So overall, in the result, we'll be interested in seeing how the way realization is going to shape up, because we have seen a pretty decent volume growth over the last 2-3 quarters.
Manish, in fact, the management is giving us his details. They're saying 5% increase in realizations. Were you factoring this in, or this has come as a surprise?
This has come as a surprise because 5% increase. Now, I don't think anybody on the street was expecting that number.
Also, Manish, I'll give you another detail. I think our ticker team was just putting that out. 17.6 million tons, 17.64 million tons. If I saw that, that number correctly. What kind of volume number were you factoring in?
Dot number 17.6 million ton was what we were expecting.
Yeah. All right.
So the realization, we were expecting something muted, 0.2% kind of a growth number. 5% is a big surprise.
Right. All right. So that looks good. So then you would put these numbers down as a beat on all fronts?
No, still with a 5% increase, we can see the cost inflation is dragging the numbers down, because if 5% realization growth was there, your margin should have been in the range of 17 or 18%, which I do not see the case over here. So freight and power and fuel costs continue to be a pressure point for the cement stock, and this is pretty much evident in Ultratech's result also.
Okay, all right.
Stock call, before we thank him. Just a call on the stock now, Manish. What's your rating and target price?
We have a buy rating on the stock with a target price of 4,800.
So down but not out. That seems to be the day. Anuj, how do you look at this? Because we've not entirely collapsed. It was looking very threatening and menacing at 230.
Yes.
Now, how would you read the picture?
Yeah, down but not out. But the thoughts on Nifty perhaps making a move towards 10,700 on expiry, I think that is out of window now, Surabhi. I think this range is being respected. 10,550. Give or take 10 points, and 10,620, again, give or take 10 points. That range is being respected. The problem for the market is the bank Nifty, because even though the Nifty has come off the low point, I think on the bank Nifty, again, there was a bit of an intraday recovery, but that's also the problem point. I mean, ICICI Bank, I think, in particular, is the problem point. 2% lower now is what we have on ICICI Bank, and even HDFC Bank, of course, down a bit. But Ashwani, what would be your key takeaway for the day?
See, it's not much of a recovery. The lows of about 10,550 thereabouts, you recovered hardly 10-12 points. So my sense is that the breakdown still looks imminent, because on the upside there isn't enough to take the market higher. Let's see if there is follow through tomorrow. Otherwise, it's back to the same old range. Why the follow through is likely? Because the bank Nifty has broken its range down. So once one index does that, generally there tends to be a follow through by the market also. Plus, things are getting worse on the other side. I can't see any positive news which can change the scenario suddenly. So maybe another day of range trade before we finally decisively break down.
Well, look, Tata Power. Okay, the lights have definitely come on this stock. Big move coming in. Surging away, a 2% increase on Tata Power. That's quite a spike. Okay, interesting. Lots of stocks on the move. Let's get Nimesh in with a sense of what the word is out there on the street today. Nimesh, so, a bit of a disappointing day, I guess, for the bulls at least.
Yes, Surabhi, but again, the sense I'm getting is, I guess the second half was a little weak for India once the Europe opened weak. So I think global cues will be very important to watch out for, coupled with the fact that the domestic cues have turned little negative, both in terms of crude and in terms of currency. So that's a near-term challenge for Indian markets. So, as Anuj pointed out, the upside looks capped around the resistance zones of 10,600, 10,650. So that's the first feedback. Again, we have an expiry tomorrow, so you're going to expect some sort of volatility for sure. Even in terms of flows, it's been quite mixed, so to speak, with the FIs continue to be net sellers in the cash market. So that trend continues in today's trade as well. So, that's been the feedback for the last few days, that even in the mid cap and small cap, at least the smart HNI seems to be selling and liquidating their position. So maybe that is the reason why you're not seeing big move in the mid cap and small cap as well. I guess because of the expiry and the fact that there are two large bank results tomorrow, both in Axis Bank and Yes Bank, the bank Nifty will be in focus, and the fact that there are some rumors about numbers not very good for most of the banks except for Yes Bank. I think bank will be under pressure in the near term. But I guess from a tactical point of view, it looks like 10,650 is a very strong resistance on the Nifty.
Okay, Nimesh, thanks a lot for that. Kunj Bansal is with us, ED and CIO at Centrum Wealth Management. Kunj, hi, good afternoon. Are you telling your clients to load up on IT, considering the kind of move that we've seen in the currency, or you think that move is getting a bit overdone now?
So a large part of the move in the IT in the short term has already taken place, and to that extent, if somebody is looking at a shorter term return from the IT going forward, still from here could be a difficult thing to get it. Yes, if one takes a longer term view from here onwards, then that is something that has to be seen. Now, going forward in terms of the political uncertainties that are weighing on the Indian market, these are some of the sectors which are being seen as a defensive sectors where the money is moving to and is likely to move. So that's the reason that we have seen a sharp outperformance. There was an under ownership in the whole sector from the underperformance, financial underperformance that the sector was undergoing for the last 2 years, and that is what has resulted into short-term move. I think that's largely over for the time being.
Okay. Kunj, what thoughts on some of the NBFC numbers that have come in insurance? I mean, ICICI Pru really stunned the street.
Yeah, that has stunned the street on the NBFCs. Cholamandalam has stunned the street. Also the results have been significantly higher than the expectation, and that also resulted in the stock price moving up. So that is a trend that is likely to continue. Probably we have a lot more results coming in. Amongst our research picks is one of the NBFCs, L&T Finance. That is something that looks good at the current levels of the valuation. One doesn't know whether this quarter number will be better than expectation or not, but expectation itself are of decent growth. Company's ROA over the last 2 years have gradually inched up from the change in the business model that the company has taken from 1.4 to 1.7, 1.75 odd, and are likely to inch up further. So these are the kind of opportunities where the investor interest will continue to be there.
Okay, just about 1.5 minutes left for markets to close. So let's just do a quick recap. I have to say that bulls would be disappointed, especially the way the market came off towards the end. Yes, there was a bit of a recovery, but for now that range is well and truly intact. In terms of stocks, banks dragged the markets today. ICICI was in fact the chief contributor on the way down, along with help from SBI, ICICI, Axis and even IndusInd Bank. Commodities were down, both producers and users, which is interesting. GAIL, HPCL, Vedanta, Hindalco, Tata Steel, IOC, all of them were down today. On the way up, IT of course, TCS, HCL Tech, Tech Mahindra, all higher. TCS getting back to that $100 billion market cap. Actually not, because of that big move in currency. That moved to 67, so now you'll have to get to 6.7 lakh crores to get to that 100 billion again. Bharti Airtel of course was up about 3%, and Mahindra was up about 1.7%.
Okay, on the mid-cap side of the screen, Anuj, 100 down on the index, 0.5% decline coming in. Lots of mixed trades. Obviously, mid-cap IT, the blitzkrieg on that part of the market just simply continues. So if you talk about today's winners, NIIT Tech, that stock's closed up almost 9-10% as the day goes out, 10.3 to be precise. Then, of course, Persistent Systems numbers weren't as bad as the market was fearing, so the stock got rewarded. Lots of buying in the afternoon, in the last hour on Zensar Tech. So about a 5-6% up move coming in there as well. Mindtree has managed very, very strong. The other theme that played out today was life insurance. Again, that's a result reaction that kind of stems out. So ICICI Pru 4%, HDFC Standard and SBI Life. All these stocks have managed 2 to 3%. So there's a lot of interest out there. If I talk about more gainers, DHFL 4.5%, Indiabulls Ventures 10%, and that was a circuit pretty much throughout the course of the day. We've seen good buying on Raymond, positive result reaction playing out over there. Thomas Cook was interesting, 3.5%. Let me pull up Questcorp and TeamLease as well. The staffing space is definitely something that the market has its keen eye on. And we've seen a big move on TeamLease today, about 10% on that stock as well. What else really stood out for you? Of course, let's talk about Mumbai real estate because of this whole development plan issue. So DB Realty is going home with very handsome gains of about 12-13%. India Bulls Real Estate, let's pull up that stock as well. Peninsula Land, some of these other plays which are Bombay-based, Mumbai-based, most of them were up. Oberoi Realty was different because obviously the result reaction, not a very handsome set of numbers from Oberoi Realty today. So these are some of the major gainers and losers. Mishra Dhatu was on the move again. Ashok Leyland, I don't think the stock knows how to fall. So 3.5% up on Leyland as well. So decent day. Just quickly talking about the losers. Interestingly, a lot of what has gone up. So hotel stocks, for instance, were cooling off today in a big fashion. Whether it's Lemon Tree, whether it's EIH. These were some of the key losers on the way down. PC Jeweler, we have been discussing ad nauseum. 16% down last count on that stock as well. Logistics, remember the big massive rally yesterday and even this morning? Well, the afternoon is looking very, very different. Gati is now from a 10% move in the morning down to just about 1%. Snowman has lost 5-6%. Patel Integrated is down 4-5%. So this is where the gains were coming off. Some stocks like Petronet, LNG, India Cement, and even a Delta Corp, perhaps some of the bigger mid caps where traders usually are pretty active. These were stocks also on the downside. So I guess a very split day for the mid cap basket today, Anuj.
Oh yes, you know, we call it Mishra Dhatu, but it's actually Mishra Dhatu. So Mishra.
I stand corrected.
No. I'm just for a lot of us, you know, for a lot of people, you know, Mishra of course is the Sanskrit name for alloy. Dhatu of course is the Sanskrit name for metals. So it's basically an alloy and metal play. So anyway, 3.5% higher on that.
That's an important clarification because I always remember, I mean, wondered this is a Government of India undertaking. So how come one Mr. Mishra?
No. It's not Mishra. It's Mishra. It's a Sanskrit word, Surabhi, which actually means alloys, right? And Dhatu means metals.
Absolutely.
Which is simple. But let's take some final thoughts from our guests. Then, Kunj, did you manage to get this Mishra Dhatu? I mean, in IPO or after that?
No, not really. So at the time of IPO, we had indeed looked at the company and the numbers were not as exciting. And our memories are short, but if we try and recall, the company had found it to be barely manage its IPO through. But subsequently, there has been a lot of interest, which is surprising. But yes, we were not able to get through to it.
Okay.
Ashwani, limited trading history, but your thoughts on this stock? Okay, Ashwani, if you are hearing me, limited trading history, but do you have thoughts on this stock, Mishra Dhatu?
See, it's a very simple situation in all new IPOs. Once something crosses the listing price, listing high, you know, then who would like to sell it now? So, you know, just the strong demand will take the stock higher. So my sense is it should easily get past 200.
Ashwani, what about the market as a whole? The way this day has ended out, what would your advice be for tomorrow morning?
Well, you know, we are still in that range technically, but, you know, the way the sectors are moving, the way, you know, mid caps are getting sluggish. Now hardly there's one IT sector which is holding up the market. I think if things start to break on the yield or crude or those other parameters, I think market is now slowly beginning to take cognizance of that. For a while, it probably hoped that things would correct, etc. But I think 10,540, 550 on the downside, 10,620, 630 on the upside, that 80 odd point range. Once that breaks, we should get a follow through.
Okay, Mitesh, same question to you. What is your reading, considering the Nifty managed a bit of a rebound from the lows?
Yeah, so my sense is that I think this market, you know, still is in that consolidation between 10,630 to about 10,500, and actually we haven't tested 10,500 for last many sessions, but that's where the support comes in, and I'm still hopeful that eventually this consolidation will break on the upside. So in that sense, for me, it's more of a long bias market. We are trading with more of long bias on stock side as well. And on the index, I think closer to about 10,500 is when I think, you know, I'll be comfortable taking a long position with a 30-point kind of a stock.
The race for Fortis is heating up ahead of the independent panel meeting today. IHH Radiant are back in the race with binding offers, while Manipal TBG have also revised their bid. We have Nisha joining in with the latest details. Lots of twists and turns in this one, Nisha.
Fortis Healthcare is clearly in a bind when it comes to the bidding war. That's really started and right ahead of the advisory committee meet. Well, Manipal as well as TPG, that offer has been revised, and IHH as well as Radiant have really made it a binding bid as was required to be eligible for this particular war. So 4 bidders at this point. Let's take you through the important bids and what they really mean. First of all, Munjal TPG. Now they have made it much more compelling for the shareholders who had been against this by giving an open offer as a component for the hospital business of Fortis Healthcare. Remember, they have offered to buy private equity players for SRL as well, and they want to buy another 5% to also take care of the cash requirement of the company and have even arranged for 750 crore rupees. So the upfront payment can be about 1,000 odd crore rupees, and the stock implied valuation is 160 rupees per share. They also have a right to match the winning bidder. Now let's go across to the second one. IHH, a global player but has been extremely conservative, has given a binding bid but only for 650 crore rupees as an upfront payment. They want a due diligence, only then they can come up with a 3,350 odd crore rupees of the lump sum amount that they look to infuse, and that can come only after exclusivity, and they want 2 board seats. So that could be a tough one. Apart from that, let's take it straight to Radiant as well. That revised its offer to a binding bid, 1,200 crore rupees for Mulund facilities. The upfront payment is what they are offering. Buying out Mulund facility for upfront payment, that could take some time, but they want also a due diligence process, and only then they can come up with the final offer of buying out only the hospital business, not SRL. That's not in the mix, but they plan to spin off SRL. But their implied valuation per stock is higher than others. Now, Munjal Burman sitting tight with their binding offer, do not require due diligence process. 1,500 crore rupees has been offered, and upfront payment of 750 crore rupees, and they have offered in 2 tranches in preferential allotment and warrants. Preferential allotment at 156 rupees per share, and also the preferential warrants at 161 rupees 60 paise per share. So these are the 4 bids that the advisory committee will be taking up. But apple to apple comparison, and let's pull up that particular chart in terms of the stock prices of each one. That could be a defining factor when it comes to the shareholders. Of course, the structure is going to be very important, but the time taken, remember, for a cash crunch, Fortis Healthcare, which really wants a new buyer quickly, even due diligence requirement is going to be important, where Manipal, TPG as well as Munjal Burman do not want, while the other 2 bidders clearly want. It could be tough to really come up with a solution and the final answer by 26th of April, as has been decided. Let's see what the advisory committee today decides and therefore advises to the board of Fortis Healthcare.
RBI circular ordering all payment companies to store Indian transaction data within the country's boundaries will definitely cause some disruption. That is the word coming in from MasterCard's Asia Pacific co-president Ari Sarkar in an exclusive conversation with CNBC TV18's Kevin Lee. Ari also said that MasterCard remains quite bullish on India. Here's more.
Let me state in a completely unequivocal sense that demonetization's positive impact on the digital economy growth remains extremely strong. If you look at cash circulation in the economy, pre-demonetization used to run at roughly around 12.5% of GDP. We're seeing that has come down to around 8.8%, so close to about 9%. Now that's a very significant reduction of cash in circulation. So that's a very positive impact of demonetization. If you're looking at MasterCard's business here in India, when you look at the quarterly volumes of MasterCard on a pre-demonetization period, our volumes at the end of this quarter is not significantly off from that peak volume.
Does MasterCard have big plans to get into the peer-to-peer space anytime soon? Are you in talks with other players?
We are doing a lot in the peer-to-peer space, and a lot of that is happening at a global level, and many of that global innovation is going to come to India. Peer-to-peer payment capability, powering up WhatsApp, Facebook Messenger, all of this capability is already live in the US.
You mentioned that you're still in talks with the Reserve Bank of India. In its current form, the demands that they have, that within 6 months all transaction data should be moved into India's boundaries. Is that tenable without this friction coming into the picture like you mentioned?
Well, there's obviously going to be some disruption. It'll be hard to say, but I would not like to conjecture at this stage because this is a fairly complex topic. What needs to get mirrored to India, what needs to get stored, those are details that one is still working through.
Last question on this and then I promise we'll move on. But currently, how much of that data is already stored in India? Is there any part of it or is it completely stored outside?
Well, a lot of that data is already stored in India because if you look at, when we move transactions from point A to point B, we have our what we call MIPS, MasterCard Interface Processors, which actually interacts between banks in the India market itself. So, I don't have the exact numbers, but there are transactional information which is already residing locally from MIP to MIP.
Okay, let's talk a little long term then. So when MasterCard India looks at India in 2025, is it much more optimistic now than it was before demonetization? And how will this reflect in investments made in India or plans for expansion in India?
We remain extremely bullish on India. I think India has been a country that we have been present for many decades. We have invested in the last 3 years over $550 million in India. We remain extremely aggressively pursuing more growth in India.
At commodities now, and as we speak, the Agriculture Ministry is meeting the state secretaries on the Niti Aayog formulas. It also is about on what they really have been looking at. They are discussing the procurement models. The Kharif campaign 2018 as well starts today. And remember, there have been deliberations on the effective models for procurement of many of these commodities. So whether it's price support mechanism, market assurance scheme or price deficiency procurement scheme is what the government is looking at. And of course, there have been a lot of explanations as well on what the government actually could be doing within these. But just to get the numbers right, the Agriculture Ministry has come out with 25.5 million tons target for oil seeds. This is their first number coming in for FY18 Kharif season production targets. That is what the Agriculture Ministry has come out with. Excuse me. 98 million tons target for rice and kharif, but it is oil seeds that we are talking about. So 25.5 million tons is what they are looking at. B.V. Mehta of Solvent Extractor Association as well now joins us. Mr. Mehta, hi, thank you so much for joining us. What is your first reaction on the number as the FY18 kharif season production numbers have come in? 25.5 million ton is what oil seeds are seen at.
I'll be too happy to have this number comes true.
Okay.
It's a too high number, but definitely if to achieve this number, government has worked a lot and make sure the farmers are properly incentivized so that they take the oilseed production in a big way.
Mr. Mehta, what is your sense on the procurement part of it? Because while we, of course, have seen government continue to deliberate, we still have to see that final frame regulation actually come in. But how are you looking at the whole scenario of the prices of oil seeds and the MSP itself?
No, right now, soybean is much higher at about 3,750 compared to 3,050. Same way, the groundnut also more or less is near to the MSP. The worries is about the mustard.
Okay.
The mustard MSP is 4,000, and today quote for 40% Jaipur condition is about 3,875. And in fact, the farmer is getting 3,600 or 3,550 in hand. That's the cause of concern. The farmer is losing interest. So government must step up their for MSP operation, or I would rather go with that the Madhya Pradesh government scheme Bhavantar. That's the best scheme where industry will get the raw material and the farmer will get the difference. I think government should promote that scheme rather than buying and storing and getting rotten the oil seeds.
While we, of course, will understand on what really is happening there. But one final question, Mr. Mehta, and this one is about the price view going forward from here. With the kind of global cues that we are getting, especially with what's happening in China, their demand, of course, has been quite wavy in the recent few weeks. How are you looking at the prices moving forward for the whole sector?
If you ask me about the edible oil as a price, it is a price is not very strong. And I'm not expecting the price to go up much higher than what is present. Maybe slightly, it may go up down because of Argentina lower the soybean crop. But at the same time, the tussle between the USA and China, everybody is watching whether it settles or China move to the other origins. But other origins cannot supply the Chinese requirement. So
well,
that will be a turning point for the price.
Oh, well, absolutely. Thank you so much, Mr. Mehta, for joining us. Well, that's a view really coming in from the Solvent Extractor Association. The number, according to them, at 25.5 million tons for oil seeds is slightly on the higher side. But remember, these are the first target estimates now coming in, and much, of course, would be awaited as the days go by. But Fayaz Udani of Kotak Commodities as well joins us to talk about that. Fayaz, hi. While, of course, we are looking at the first numbers coming in on your screens, the rice targets, of course, are put at around 98 million tons. We are looking at 25.5 million tons for oilseeds. What is your reaction to these initial numbers?
Well, the target seems to be very high, and I hope we achieve that, but it seems to be too high for me, looking at the productivity which we have been maintaining. Talking about the Rabi season, we continue to maintain more or less 900 to 1000 kg per hectare, to give you a classic example of mustard. So the productivity is the concern, or the yield is the concern. So it would be interesting to see what does the government do to really achieve this target in the coming time.
Even the pulses target seems slightly on the higher side at around 24 million tons. The earlier estimates were slightly on the weaker side there, but it is rice really which we are looking at much on the higher side. So what is your sense, Fayaz? Where are we headed when it comes to the agriculture prices? Because we do understand there are various statements coming in from the government in sense of procurement. Those norms are expected to be released before this month ends. Ahead of that, what is your sense?
See, over the years, I have learned one thing, that if you really want high productivity, you give high prices to farmers. Take the cases of pulses, higher pulses price with the classical case in 2016, where we have seen such an exceptional crop coming in 2017. So if the prices continues to be higher for the farmers, you can see the productivity and everything coming into the market. But right now, the way the pulses prices have been tumbling, or be it the oil seed prices, where prices are actually trading below the MSP, then it is very important for the government to make a strong statement by walking the talk and actually accumulating or making the price difference scheme to work out. That will give the confidence to the farmers, and they would be aggressive in their sowing and productivity in the next season. So when the prices are going up, we have a concern that it is becoming very expensive. When the prices are actually coming down, then we have a concern that farmers are not getting price. So it has to be a balance which has to come from the government side on the either side. When the prices are going too high, they need to control, they need to increase the supply. At the same point of time, on the downside, they need to ensure that the support is there for the farmers.
Well, absolutely. All the stakeholders really need to be checked into this. A balance needs to be maintained. But before we let you go, Fayaz, what would be your best pick today when it comes to the non-agri space? Because we've seen crude oil prices gain up yet again, and the metal prices have been on the stronger side as well.
Well, Manisha, I remember very clearly last week we were having a word on gold, and I clearly said the 31,000 level has been taken off, and INR would be something which would be supporting. And this week we are where we have almost seen INR at around 66.50 or 60. In the international market, though the scenario is a little bleak, or rather range bound for gold, but looking at the global factors, the macro factors, I still believe that gold is buy on dips from a medium term perspective. On a day-to-day basis, we might see some correction, and 31,200 or 31,000 in the next coming days is quite achievable. But from a broader perspective, everybody needs to hold gold in their kitty, and we are towards a bull rally in gold in the coming time.
All right, that is good to hear, because that bull rally in gold is something that a lot of voices have been talking about on the channel today. But thank you so much, Fayaz, for joining us and giving us a sense on the agro space as well as on gold.